Now, the length of the time on your credit is 15%. So if you had a credit card for like 6 months to a year, that means your credit score is going to start going up, 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 up. But the more you pay on it, the time you're paying on it, the time you should pay on it. So that's good. So the length of time that you have with loans, car loans, personal loans, student loans, and a student loan is no different from a regular loan. It's a loan. It just has student in front of it, and you paying for schooling. But it's a loan. A loan is a loan, period. Okay? I've seen people buy houses paying their student loans back. And remember, this is a FYI to all of you guys. You cannot purchase a home in the state of Georgia and owe federal money. Okay? You cannot purchase a home in the state of Georgia and you owe student loans or federal money. Okay? Just to let you know that. Okay? All right. So, new credit. When you go to get new credit, now you got increase. So the increase, that's one thing. You're going to have your score go down. Now, if you get the account, now your score going to go back down. You're going back into the pie again. So you're going back into the pie of the amount, the payment history, and the length of history that it is, and the type of credit that you're getting. Okay? So you get a credit card, 10%, loan, 10%. It's the type of credit lines you have. So you need a mixture. Everybody think that, okay, let me get a credit card. Okay, let me get a credit card, maybe a Capital One, a Premier card, or whatever. Those cards, they're okay because they're like secondary market cards. But you really want to stick with your Capital One cards, your bank cards, like your Wells Fargo, your Chase, your Navy Federals, your Amex, your Discovers. You want to stick with those type cards. Your Citibank, that type card. You want bank cards. So if you can get those to build your credit, and if you can get a secured card for that, that would be awesome. Because getting these other cards is paying these high behind interest rates. And I've seen how I have a few of them, and I did it to see what kind of impact that it would have on your credit, because I test my credit with everything. So I usually go in first as a guinea pig to get to see what's really going on, how it really would affect you. But the thing is, to keep them down, you have to pay them on time. Pay them on time. Hey, Beatrice, you have to pay them on time. You have to make sure everything is paid on time. So that's the major thing about doing credit cards, okay? All right. I said about new credit and length of history. So that pie, you got 35% is always payment history. 30% is amounts owed. The length of credit history is 15%. New credit is 10%. And the types of credit is 10%. Okay? So that within itself is your credit pie on how you deal with your credit profile. So if you have time, Google credit pie, look that up and see what you need to do and how you need to do it. If you need assistance, we're here at Home Solution Services Credit Builders. We will assist you as much as possible. But doing all of that, our goal here at Home Solution Services is to assist you to get back on your feet, to get you restored for a better lifestyle. Everything surrounds by your lifestyle. It's a lifestyle that we live, whether we're living a Christian lifestyle, whether we're living a hood rat lifestyle, whether we're living a rich lifestyle, a bougie, spoogey lifestyle. Whatever type of lifestyle that you're living, it is. Okay? And also, thanks, Danielle. Also, if you completely pay off your accounts, guess what's going to happen? Your score is going to drop. Okay? Let me explain why. Because I've had a lot of people ask me that. So, your score will drop if you say, for instance, you have, let's say you paid off your mortgage, you paid off your cars, you paid off all that, your score is going to drop. Why? It's because the system has nothing to calculate. Now, if a lender goes in and see that you paid off a house, then okay, yeah, cool. That's cool. That's cool for mortgage credit. Okay, all right. So if a car dealership see that you paid off a car, you know what? That's good for car credit. So that's good for that. But for your overall profile, it doesn't actually help you a lot. So that's why it's good to have revolving credit, which is credit cards. Credit cards is the heartbeat of your credit. Okay, I'm talking the heartbeat. Now, the heartbeat of your credit with credit cards, you have to pay them on time. Again, I'm gonna say it one more time. A late is the worst thing you can ever get on your credit profile. Let me repeat. A late is the worst thing you can get on a credit profile. And you don't want to go try to get a house and you was late on a $200 credit card. We'll let that marinate. Now, would you lend somebody money for a $100,000 house and they was late on a $200 credit card? Okay. No, I don't think you would. Now, would you lend somebody money that had a car repossession and let their car go back? You'll lend them some money and then they out balling irresponsibly? Now, we do have some cases where cars repossessed because they landed on hard times. Hey, I was one of them. My car was repossessed because we landed on hard times. So what? Big deal. I'm still here. I'm living. I can buy another car, which I did and paid for it. So the thing is, you just have to make sure when you have things like revolving credit, make sure you pay it on time. But those, if you pay your car off and pay your house off, and even if you pay your revolving credit down to 0, your credit score is going to drop. Why? Because it has nothing to calculate with. Okay? So you have to, if you're going to extend that out for a little bit, extend it out. Or get a credit card. Okay? Or get some more credit. Get it revolving. Get it going. And get extensive lines of credit cards. Okay? The larger credit cards. And before you pay off your card, get a credit card. Get a large credit card. Okay? You got the credit, just get a larger credit card. Instead of having debt, let's get some credit. You get ready to pay this off. Now you replacing it with the credit card. Yeah, credit card is the heartbeat, you guys. Trade lines, whenever you hear somebody say, we got to buy some trade lines, it's nothing but credit cards. Trade lines are credit cards. Large amounts of credit card, large limits of credit, and small limits of credit. That's all it is, credit cards. And I try not to, I try to tell people to don't be scared of money. Money is not going to hurt you. It's going to help you. We all need it. And don't get mad because somebody got more than you. Try to get some more. It's okay. I mean, don't go counting your sister's pockets over here. You get your pockets together. That's what it's all about. Okay? All right. So we are going to call in Mr. Crypto Quavo. And if he's on right now, let me see where he is. If he's on, I hadn't seen him yet. I told him what we were going to be on this live here. Let's see where he is. Let's see, Cuevas. All right, so he should be on in a second. But if you guys have any questions, I want you guys to ask me questions, definitely. I need you to do that. So if you have any questions, ask me questions. I don't know if my, and Danielle, if there's any questions, because my phone is lagging. So excuse me. My phone is lagging, so I can't see my comments, and my comments are kind of slow on here. So you guys, let me see if Quavis is coming in. Okay. Okay. I'm not saying much. Um, let's see if these things work. So as we wait on Quavis, let's see what happens here. But yes, I'm excited, guys, because doing credit repair, I've been doing it for over 10 years now, and I've had a lot of people, as we all know, we have good people. We have people that I have repeat clients all the time, and I try to make sure that I do the best that I can for each client. Now, everything is not for everybody, so it is what it is. And what happens is, through the years, you learn to read credit, you learn to read people, and you're able to get the best for your clients. Now, laws have changed. A lot of things have changed since COVID. I mean, it was a little bit easier to do some things, but it has changed a lot since COVID. So COVID has actually put some changes in there, and the government is basically trying to take it and put it in their own hands of this credit thing, and putting out new laws. So a lot of you guys, you get these packages that have the 609 letter. The 609 letter is good, but now you need something a little bit stronger than the 609 letter. There's a lot more laws. It's a whole lot of laws that you guys haven't even tapped into yet. There's a lot more agencies that you don't even know about yet. There are a lot more agencies out there that you need to be aware of. There's agencies that even hold evictions, and there's agencies that hold your information since you've been back in childhood. So the agencies are out there. You got the Save Stream, you have LexisNexis, you have Innovatus, and Innovatus is one of the stronger ones because it's the one that holds the mortgage part. So when you think you got everything off your credit for mortgage, now Experian, TransUnion, Equifax, they reach back over here to Innovatus and say, hey, what's really going on with their credit? And then you find out that, oh man, I thought that was off my credit. So there's a lot of things that goes on behind the scenes that you don't even know about. And a lot of people do know about it because credit repair, since the pandemic, credit repair has become the thing now. People are trying to do credit repair, but a lot of people are in it for the wrong reasons. And a lot of people call me and ask me, hey, I'm doing credit repair now. I was like, okay. Then they asked me to show them. They asked me to show them and I will be teaching classes in October to do credit restoration. But you can't you're dealing with people's lives and personal information. And it's so important that you take that in consideration and not just say, hey, I'm going to charge you $600, $700 to do your credit report. And then you at home, you're doing a credit report and you have visitors over and you got these people information just sitting out. So their information is in jeopardy of identity theft. So we really have to be careful of if we're going into the business, go into it wholeheartedly. Hey, David, go into it wholeheartedly and make sure that you're going into it not just to be going in for